Director Slater Carter,
Present.
Director Marsh,
I thought you said me already. Yes, here.
No,
Chair
you
Ruddock.
for
I was reading for you. again.
Oh,
Scott.
Yes, Chair Ruddock.
Yes, I'm here. Thank you. Everyone's here tonight. And we're moving on to item 2, which is public comment. So members of the public may comment on anything that's on the consent agenda, but not on the regular agenda. And you can speak on any other item you'd like, as long as it's not on the regular agenda. So do we have anyone online who would like to address the board on items not on the regular agenda? Seeing none and seeing no one in the room, but we will move on to the consent agenda, which is item 3. And that is item 3A, approved minutes of October 27th, 2025, regular board meeting. Item 3B, approved disbursements for December 8th, 2025. And item 3C, monthly revenue report and expense report for the period ending October 31st, 2025. Is there anyone who needs to pull an item?
I'd like to pull the minutes, item A, because I think I have a couple corrections to those.
Okay, anybody else? Okay, we will pull item 3A. Is there a motion to approve items 3B and 3C?
Second.
All in favor?
Aye.
Aye. Any opposed? Not hearing any. We'll go back to item 3A, the minutes of October 27th, 2025. Director Marsh.
I think, excuse me, on the consent agenda vote, where there were 4 items and Director Nagenguest pulled 1, I think we voted unanimously on the other 3 to approve them. And it was just on that one, which was the October 1st minutes, that we had a separate vote where Director Nagenguest abstained. But in the way it's written in the minutes, we only voted once and he abstained on all of them.
Okay.
And then
Corrections. Good catch.
the other one is on the regular business after the discussion with Stantec on the building. We had a motion to pass item 4A, which was discuss the preliminary design. It doesn't say what we passed, but I think what we agreed, it was recording that we agreed that the design that was the new building, we simply agreed that was the favored design. So I didn't, when I read this, I thought, what does it mean to pass discussion of the agenda item? I think we decided to do a vote on agreeing with the recommendation from Stantec.
Yes, I think the minutes should be revised to expressly identify that.
Yeah,
I would agree with that.
Okay.
okay. So I won't sign, but it says.
We'll make it clear.
So if we make a motion to approve minutes as amended,
We can. I move to approve minutes as amended with an amendment to the consent agenda vote and to the vote on the preliminary design report.
Second.
all in favor, say aye.
Aye.
Any opposed? Motion carries. Okay, we will move on to item 4, regular business. Those items are 4A, receive and file the annual comprehensive financial report. Item 4B, accept the quarterly financial report for the first quarter of fiscal year 25-26. And item 4C, authorize general manager to issue a purchase order to GSE Construction for the install of effluent pumps in the amount of $368,500. So we'll start with item 4A.
Yeah, so it's that time of the year when we bring the annual comprehensive financial report to the board. The way it works is this report has been prepared by our auditors, N&N. We had a presentation to the finance committee meeting in the month of November, and the finance committee recommended we bring it to the board. So after the board okays it today, then we would file it with the agency, which is GFOA, with all the relevant documents, and then wait for them to review it. And if it's successful, then we get awarded the certificate, which normally takes about 6 to 7 months. So today we have brought this ACFR to the board for review. We also have our auditor, Jared from NNN, who will be making a short presentation. Before he goes on to the presentation, I would like to thank basically our finance team, which is Peter, George, Callie, our auditors, of course, the finance committee for giving all their feedback and for getting this report completed on time. It's required to be completed before December 31st, and we have a lot of time now to submit it to the agency. So I'll pass it on to Jared. He has a short presentation, and then we can open it for questions. Over to you, Jared.
All right, thank you very much, Kishan. I'm going to share my screen here if I may. Can we see the PDF on the board here, on the screen?
Yes.
All right.
Yes.
Okay, as Kishan mentioned, my name is Jared Solmonson. I'm an audit partner with Nigro and Nigro, and I worked with Peter, George, and Callie to get the fiscal year ending June 30, 2025 audit completed. Okay, I'm going to start with the scope of the audit. We were engaged to perform audit test work of the entity's annual financial statements and report. We were engaged to report on the entity's internal controls over financial reporting and on compliance in accordance with government auditing standards. Our responsibility as auditors, in accordance with professional standards, 1, to form and express an opinion about whether the annual financial statement results that have been prepared by management are presented fairly in all material respects in accordance with accounting principles generally accepted in the United States of America. 2, our responsibility is to plan and perform the audit to obtain reasonable assurance, not absolute assurance, about whether the annual financial statements are free of material misstatements. And during the course of the audit, we are to consider the entity's internal controls and segregations of duties over accounting procedures and financial reporting as we perform our audit test work. Such considerations were solely for the purpose of determining our audit procedures and not to provide any assurance concerning such internal controls. So we evaluate the internal controls to make sure the information that we receive can be relied upon, but we do not express an opinion on the internal controls overall. Moving down here to the results of the audit, an auditor's unmodified opinion has been issued on the annual financial statements. That is a clean opinion. We do not want any modifications to the opinion language. In our opinion, the annual financial statements are presented fairly in all material respects. All adopted significant accounting policies have been consistently applied. Estimates are considered reasonable for depreciation, pension, and OPEB expenses. These are non-cash expenses. New GASB pronouncements were adopted, and all required disclosures are properly reflected in the annual financial statements. AUC 265, communicated internal control-related matters identified in an audit. No material issues arose to be reported to the governing board or management during the course of the audit. Any minor issues or questions we had were discussed orally and corrected during the course of the audit. And then how do we make you better? We like to try, you have to get an audit done. It's part of the law here with local governments and special districts, but we like to provide a return on investment. We do 50, 60 special districts, local government audits throughout the year. So we see, the good, the bad, and the ugly, and we like to share, best practices with our clients. So just throughout the course of the audit, discuss with Peter and George there, just anything that we see, best practices, anything from your peer agencies. Moving on to the next page here, just going to do a brief overview of how the numbers came to rest through the income statement. Operating revenues, operating and maintenance assessments increased $667,000 from $5.6 million in 2024 to just about 6.3 million in 2025. Collection assessments decreased by about $151,000 from $775,000 in 2024 to $624,000 in 2025. Pass-through and service charges increased about $55,000 from $242,000 in 2024 to $297,000 in 2025. Other operating revenue, just some miscellaneous items there, increased about $17,000 from 24 to 25. Non-operating revenues, investment earnings, up about $31,000 from the prior year. Capital contributions, federal and state capital grants, very steady, up about 27,000 from 600 or 360,000 in 2024 to 387,000 in 2025. In capital assessments, down about 60,000 from 3,059,000 to 3 million flat in 2025. That brings us to an increase of 586,000 in total revenues from 24 to 25. 10.1 million in 2024 and 10.7 million in 2025, so solid increase there. Moving to operating expenses, treatment expenses decreased by about 41,000 from the prior year. Collection system expenses up about 86,000, 952,000 in 2024 versus 1,038,000 in 2025. Environmental compliance, very steady, 200,000 in 2024 versus 192,000 in 2025. Infrastructure expenses, big increase here, 523,000 increase over 2024, so 1,500 in 2024 versus 525,000 in 2025. And then general administrative expenses, got an increase of 78,000 over the prior year, 2.14 in 2025 versus 2,069,000 in 2024. That brings us to operating expenses before depreciation, total of 8,075,000 in 2025 versus just over 7.4 million in 2024. That's an increase of 638,000. Depreciation expense, up about 546,000 from 2024 to 2025, up to about 1.9 million here in 2025. Total operating expenses, including depreciation, finished 2025
Excuse
with...
me, can you tell me what page of the agenda we're looking at? Because I kind of wanted to follow along with you and. Okay,
I don't have the page number here. I'm not sure if the presentation is in
67?
the...
okay, thank you. Sorry to interrupt. I just wanted.
Okay, no problem. Let me know when you're ready.
I'll do the same thing.
No, 67.
Printed 67 on the bottom.
Well, there's a 7.
Yeah, these are the numbers. It doesn't look like this, but these are the numbers.
Oh, so
Yeah.
we do not have that chart in our agenda.
That's his PowerPoint presentation, which extracts from the ACFR.
So we have the numbers, but it's just formatted a little different.
So,
We don't have that display, right?
yeah, it would be nice to have a copy of what we're looking at it here rather than trying to find those numbers where they are on our pages, but that's fine. Go on. Thank you.
Okay, thank you. Okay, that brings us to total change in revenues expenses for the year of 728,000 in 2025 versus 1.3 million in 2024. So both solid increases. That's an increase in overall net position. Capital asset additions. The authority spent 2.8 million in new capital additions in 2025 versus 3.2 million in 2024. That gives us, taken with depreciation expense, a change in capital expense for 2025 of 937,000. Cash and investments. The authority finished the year with 2.6 million in cash and investments versus 1.9 million in 2024. That's an increase of 681,000. And then down here, we have a quick summary, just kind of showing the change in accruals of how we got from the change in revenues expenses of 728,000 to the increase in cash of 681,000. And again, that just includes debt service and then just some change in the balance sheet accruals there that brings us to the total change in cash. And then lastly, down here at the bottom, we just have investment earnings to portfolio. We just take an average of the cash on hand. So that's your 1.9 from last year, plus your 2.6 from this year divided by 2. So that gives us an average cash on hand. And then divided by the investment earnings brings us to about a 3.6% return on cash. We like to audit to about a 4% balance. So as interest rates go down, you're going to see that number decrease, but a solid return on cash overall. That concludes my presentation. I'm happy to answer any questions about the communication with governments or the ACFR as a whole.
Thank you. We'll start with clarifying questions from the board. Director Dye.
Okay, on page 107, there's the chart of, it seems to be Net investment in capital assets and unrestricted. This is the chart that we questioned last time, where some of the unrestricted ones are at the bottom of the column and some of them at the top, and it makes no sense. I don't understand. There must be a reason, but
It's the audit page 44, if that helps.
yeah, I don't have that number in mind.
It's
but,
on, it's on the
it-
bottom column.
online. Yeah, I have it printed up.
So it's in the statistical question, statistical, yeah, there it is.
What is the difference between the green on the top and the green on the bottom, and why does 2021 not have any unrestricted? What is the difference?
So these are part of the statistical section. They are unaudited items. They are provided by the district. I believe Peter puts them together. We did make an edit after the finance committee meeting to get rid of some of the other colors there that kind of didn't correspond to anything. So I'm going to have to pass this question to Peter as far as exactly how the graph was put together.
Yes, I mean, perhaps it would make more sense if it were there's another color, but if it's below, it means there is a negative unrestricted fund balance. That's the only issue, or that's the only. Well, I guess I don't understand the question in full as far as what part of it are you seeing that's throwing you off? You see, when you see the years where the green is at the bottom, those are years that there is a negative unrestricted fund balance.
Well, I see a dollar sign on there. Isn't that zero? So the greens are still above the, I don't know. It doesn't matter.
I think it's just maybe just when you go 3D, it kind of throws it off a little bit. But
Yeah.
the green under the bar graph is a unrestricted negative fund balance.
Well, it should perhaps be somehow there should be some more information on this chart so that it makes sense.
Wait, but the more information that this is just a fund balance graph. I guess the question would be, what additional information would you like to know about the fund balance that caused the negative? This information would be better answered on upcoming pages or in those years as far as what those liabilities were that caused
Yes.
but in reality here is basically our cash balance. That's what this
The
represents.
numbers are more informative than the graph.
Yeah, so if you see the table,
Correct.
Yeah.
the unrestricted for 2017 and 18 is negative. That's why the green is at the bottom. And if you see 2019, 20, it's positive, so it comes on the top. And then 21,
I think it was just
22,
too small
20
a number to show
yeah,
up.
it's too small a number to show.
Okay.
But 22 is again positive, so it comes on top. 23, 24, 25 is negative, so it comes at the bottom. We just didn't want to have different colors for positive and negative because everything is actually unrestricted. That's why it's shown at the bottom and the top.
And so when we had this presentation during the finance committee meeting, this question was brought up, and the issue was there was another item in there that was it was zero all the way through, so those were removed because that added additional color that were really not there, and so that was the edit that was made, and that's what we believed as far as what the criticism were, or the edit that would have liked to be seen made is what we understood the question to be from.
Thank you. On the next page, 109, the other income, is that the FEMA grants and so forth, the 826,000, the 455,000, and the 530,000 under other income? What is this? There's nothing that identifies the source of that. And I was assuming that must be what it is.
Wait, sorry, say those numbers again.
Page 109 or 46, depending on which number.
Oh,
you see.
46. 46. I go to the next page, 45. Okay, so 46.
What is the
Other income, this represents pass-through costs going to our member agencies.
826,000 of pass-through costs in 2023?
2020. Oh,
Yeah, that's what it shows.
Those seem like big numbers.
Pass-through costs.
Pass-through costs, not past due.
No, I agree.
Is that like the materials from the collections buys and pass through the costs?
Not only that, the other maintenance which we do for lift stations, which are owned by the member agencies. When we service it, when we replace equipment or anything, we buy it, but then it's a pass-through cost, so we bill it to the member agencies and we get back the money.
Okay, I think we only have one lift station, so we never see numbers that high.
Yeah,
That's true, but Montreal has
Everybody
13
did
lift stations,
yeah.
Hartford's got 3, so yeah.
Oh, that's mostly your.
so I mean, that's a really big number, but
It's mostly
I don't-
Montera.
Hmm?
It's mostly Montera. They have the most. lift
I know, but I'm also just. Is it in? Where are the matching expenditures? Are they in operational and maintenance assessments, or where are the matching expenditures that these are income, this is income to offset?
No, I'm sorry. The service fees, okay, so the other income here, hold on, so the service fees are the pass-through costs. The 826,669 from 2023 fiscal year, and give me a moment here. Identify these ones, but so we received for this
The
year.
revenue only page, right?
Yeah,
Yeah. But I'm just,
Okay, yes. So for 2023, the bulk of it is the grants,
okay, that's what I thought,
$732,000
that's what I assumed it must be.
for that year. That was that portion of it was $732,000. I can find out the delta in a few moments here. I believe it's going to be
Actually, on the pass-through cost, page 50
interest.
has a
Correct.
lot of.
Yes, yeah. That's page that I saw too. Then wait, no, that's not correct. So yeah, that's page I saw that has the breakdown of the revenue. But so for 2023, the bulk of it is grant revenue.
Okay, that's what I thought. Thank you. And then this is just a comment, page 51 and 114. You have the 10 largest employers on the coast side. Several of those, well, Seton Medical is now not operating, and Nix and La Honda Pescadero School District are not even in our area, so it's just a minor thing, just for accuracy of things. Well, and you know what? I have a couple other questions, but I think I'll come back and ask them in person because I'm confused by the whole adjusting journal entries for vacation pay. I don't understand.
Oh, I can talk about that now. That's I think that kind of circles back to Jared's kind of opening comment on the audit ROI. So GASB 101, this is a brand new GASB that in the past we quantifying compensated time. So when an employee leaves, their time that was accrued was paid out. So if an employee left under the end of the year, that amount of money would have to get paid out. The new GASB basically quantified all sick pay as well as other forms of pay were also to be captured in the accrual. And so going through our analysis, we had captured a larger number. And so when Jared reviewed, he would say, no, based on kind of his experience, what he's seen so far for this new, so the implementation was this current year. I would say we displayed all of our work. We had all our backup as far as coming up with how we came up with our figure. And based on said his experience, he would say, no, that number looks a little bit too high. And so what ended up happening is that we actually reduced the liability. And I said the outcome was overall, about $700,000 of a reduced liability that said there that we had originally captured on our balance sheet that was a little bit too high based on his experience. I said, no, we should probably reduce that because I said it's the likelihood of more likely than not and having it to be paid out was not as likely as would be the case, which is basically the standard of GASB 101. And so because of that, that was this AJ number two that said every adjustment after we provide the trial balance has to go through an AJ. We can't just make these changes on the fly. And so that's what number two is all about. Number
So
one is
we owe
one.
$700,000 in in various kinds of vacation pay. That's what's owed to the staff right now, $700,000 worth of vacation pay.
No, no. What you'll have to see is there, if you go to our balance sheet, you'll see that the balance that's on our balance sheet, that's the amount that is owed to our employees at 6/30/2024.
How much is it?
Hold on.
600,000?
Hold on. Give me a second. We have 216 plus an additional 148. So what's that? About 350 or so? No, it's higher than that. 360. 148, 660 plus 216, 249 between long-term and short-term, 365.
Peter,
Yes?
didn't this accounting of these kinds of hanging benefits get started when GASB started requiring accounting for retirement and retirement fund balances?
Yes and no. So compensated absences was quite a bit before GASB 68. I believe it was GASB 34 that brought compensated absences onto the books. I may be off on that, but GASB 68 and GASB 75 were the items that brought the pension liability and OPEB liability onto the books before it had not been.
Yeah. And then they started saying, oh, wait, what other things are hanging around that are
You're saying
public?
it just better than I could, as far as in my mind, it's just this constant need to stay relevant. I mean, the overall goal was to have the financials to be more readable to the layperson, and I think in the last 15, 20 years, they've not achieved that, and they've actually gone the other way. So I mean, but that's my personal opinion. I said, like with the ASB 101, that part, and George and I have I've talked about it with Jared as well. It really doesn't make any sense to us as far as capturing sick pay as a part of the accrual, because I said just there are other mechanisms that take effect first to actually have to capture a liability for what a employee may take in sick time in the current fiscal year that we're in. It really doesn't make sense to us. And not to speak for Jared or George on that, but I said we've had discussion and we just kind of bat around and just it's a bit baffling.
Right, thank you. These are just, I think overall, it's a very comprehensive report. Most of it, almost all of it makes sense to me. I had a couple of things that I looked at that did not make sense. So thank you for answering my
No,
questions.
it's thank you, George, as far as what said. It is in the title, the annual comprehensive financial report. It is designed to be fully comprehensive, and I said as of the last 4 years now, we've had these other components of the audit report. It used to just be the basic financial statements, but now we have the stats, which I think are very helpful. And the transmittal letter and the other components of it that make it what it is. And I said, as Keisha started out with, we hope to get the award. We've been successful the last few years with the help of our auditors, but I said it's not guaranteed. So we will be graded, and I said we hope for the best.
Any other questions from board
Question from
members?
Greg?
I'm taking questions from board members at the moment.
Oh, apologies, I
On
didn't
to
realize.
Public comment. Thank you.
I just wanted to see whether the committee had any comments.
The finance committee?
Yeah.
Yeah, that's a good question.
We did, that was some of the clarifications, maybe didn't get clarified as well, so we hoped that graph, it was that 3D graph, we went over about trying to explain something graphically isn't always as simple as we may think it is. And I think that's what, and we even noticed, we thought we made it simpler tonight, obviously. Still had questions, but And also, I thought it was important that Peter and George, what they thought, because that was our, same staff looking at it, and they chimed in and shared with us what some of their concerns were. And I didn't even know if I heard best practices mentioned several times in a presentation, so I didn't know if there's room for improvement. Is our auditors telling us there's things we can do better or not? But you hinted at some best practices. I don't know if there actually was, but I think it's important to acknowledge that also Peter and George do review this and did provide comments. And trying to make it readable but comprehensive sometimes can be a challenge.
It's a lot of information.
It's a lot of information.
Mhm. Anybody else before I go to the public? Okay, Greg.
Thanks. I have two questions and then a comment I'd like to make. The first question has to do with the restatement. Is the only restatement the $72,507 shown in the compensated absences in note 10? Is that the only restatement?
Yeah.
Correct. Yeah, that's a restatement of what we call the beginning balance. So it's actually the ending 2024 net position was restated by 72,507, and that was for the implementation of GASB 101. So basically, we were as if we had implemented it last year. We changed that ending balance to reflect what compensated absences would have been in 2024 with GASB 101 implemented.
Okay, my second question is about the jump in depreciation. In note 3, I find only 3% approximately of new depreciable assets have been added, but annual depreciation went up 40%, if I've done my math right. And so I'm curious about the huge increase in depreciation. And after I hear your answer, I'll make a comment. Thanks.
And Jared, if you don't mind, I had to take care of this one.
Yeah, go right ahead.
But I would say the last, I would say 3 or 4 years is when we've had a number of projects being brought on the books. And the way we begin capitalization from the previous year, and so we take a full year's so that growth, the current year project, those are put on the books as if they were capitalized as a fiscal year end. And so what you're seeing are the previous year's increase in the asset base.
Okay, I'll have to study that, Peter, to see if I fully understand what you're saying. But I did want to make a comment, and this ties back to what Catherine was saying and the board was discussing. There is an additional hidden liability that's not yet on the balance sheet, and that's the fact that assets are not valued at replacement cost. And there is a GASB committee studying infrastructure costs, and I submitted a paper to them in February and testified on video. Because the reason it matters is that some of the assets are 20 to 40 years old, and the cost of the replacement's gone up astronomically. Just since 2019, the California construction index has increased 53%. So the fact that you're seeing depreciation is a huge understatement of what is going to be the actual cost when you get around to replacing that. And I just want to make the board aware of this hidden liability, which is endemic to public works institutions across the country. Thanks.
Thank you, Greg. George, I see your hand up.
Yeah, actually, this is more for Paul and the board. Just a reminder that the ACFR is for the reason it's so comprehensive, or the impact of it being so comprehensive, is that there's a lot in here that we wouldn't make use of in terms of our day-to-day operations or even our reporting to the board. Like when we get a checklist of what's required to apply for this award, it's several sheets long. Like the checklist is just humongous, which makes it comprehensive. So that's why some of this stuff, I'm impressed by people understanding as much of this report as they do, because it really is getting into the weeds for the purposes of judging, how we're reporting. So I just wanted to make that comment to the board in general.
Thank you, George. Any
George,
further comments from board members? So this is we're just receiving and filing. I don't know that we need a motion on this, do we, Jeremy?
You should. It's probably the best practice.
All right. So can I have a motion to receive and file, but,
So moved.
okay.
Second.
All in favor, say aye.
Hi.
Aye. Any opposed? Motion carries unanimously.
I'd like to thank the committee and staff and our consultants. It's a lot of work.
Yep.
Yes,
And
well done.
the timing was really good.
Yeah.
This is an outstanding year. Thank you.
Thank you.
Yep. Each year seems to get better and better.
Yeah.
Yeah. All good. Okay, item 4B.
Has his hand.
Jared.
I'm sorry.
Oh, it's down, never mind.
Okay. Item 4B, accept the quarterly financial report for the first quarter of fiscal year 25-26.
Yeah, so this is the Q1 for fiscal year 25-26. It was discussed in the finance committee in the month of November. And they recommended that we bring it to the board for discussion and for acceptance. And like always, in the first quarter, we have, we definitely have overbalance, which varies more than 10% in a lot of cases. That's primarily because we end up paying the annual expenses in the first few months. Like, for example, insurance, service contracts. These have all been spelled out clearly in the Q1 report, saying which of those have incurred expenses. Like normally we would spread it out over the year, but like service contracts and insurance premiums, we have to pay it in the month of July and August. So that's why there's a spike. But then over a period of next few months, we would not be incurring any expense on that. So it would definitely come down. So these are the things which have been indicated and details have been provided. But staff is here to answer any questions relating to the Q1.
Director Dunn?
I just want to say thank you for the expanded budget details, explaining things. It's very interesting and helpful.
Yeah.
Thank you.
Finance committee want to weigh in at all?
No, that was a question we had. It's how come we're showing spending so much in the first quarter? Well, that you pay your annual fees sometimes up front, and that's why we're seeing it here in the first quarter.
Yeah, we have the same thing in the city with property tax payments.
Yeah.
All right. Director Marsh?
Just a couple questions. One is to that point, because now I've seen this a few times, so it's always in July, we have a number of payments. Could we not budget that way, or do we budget like just a straight line budget across months, because that's how our revenue comes in?
Yeah, in our budget, it just shows yearly expenses, whatever we budgeted for. And when we do Q1, we just divide by 3 and say, this is the total thing. We don't go month-wise.
Okay, so yeah, we don't do a monthly budget.
It's too complicated to do it month-wise.
My other question is really around, I'm looking at page 132, this one, operations and maintenance analysis. I'm going to ask for this for, at some point, maybe probably for next year's budget and financial reporting, but it would be really good to sort of start to institute this year, and that's to break out the infrastructure and just have maybe a chart of infrastructure by project and, what's the spend in the first quarter. You can get sort of a flavor on the CIP combined project, but not to that level of detail. I don't really know from that what's being paid in this year versus what was paid in a prior year. And so I think you and I talked about this. I think you wrote a note to the finance committee in August suggesting that when we budget next time, we budget much more specifically for all the projects and do our financial reporting that way. And that would be helpful. But just in terms of reporting what's in that 900 and some thousand infrastructure number, it would be good to know what's going to the Montero Force Main specifically, what's going to old projects, what's going to unspecified, the incidental infrastructure. and just have that breakout, because that's our biggest single number, that infrastructure budget.
So if I understand right, what you would want is in Q2, for example, we tell you in that second quarter what we've spent on infrastructure projects.
Right, just the same project list, in the same project number.
So by project.
Yeah,
By project.
It's just good to know if we're getting close to the
I've been
end.
asking for it for
And then
years.
my other question is, we have and have been working on a whole lot of the projects from that were first budgeted in 21 and 22. And now, for the most part now, they're awaiting installation or installation in progress or getting ready to install. So my question is, everything that is on the ongoing projects above the generator and the Montera report, and I suppose the boilers, because those we added budget this year, everything through fiscal year 22, 23, can those be reasonably finished this year, or do we expect some of those will carry into next year?
I believe it would get carried on to next year. For example, the next item which we are discussing, which is
Yeah,
effluent.
that one I noted.
That will definitely, because a lot of them, we would need to schedule it in the summertime and not during winter time, because we can't have the pumps down, or we can't have
Right,
afford to do maintenance on these things, which are absolutely essential if there's a winter storm.
Yep.
So you would like to get it pushed. And during summertime, what happens is we also find it difficult to get contractors to bid for it, because everywhere the contractors would like to work during the summertime. So projects which really require attention, which needs to be imminently replaced, we take care of those. Otherwise, we keep the equipment and store it and then schedule it as and when it's possible.
okay. That's why it would be helpful to see
Sure.
what we've got so far and what we got yet to come, a little bit more timely.
Yeah.
Okay, I think we'll need a good sense of that when we get to doing next year's budget.
Well, and it seems to me that a lot of times these projects have taken longer than planned for because of the availability of parts, not only labor, but parts. And
Going to
permits,
RFP 3 times for the same.
That's right,
Yeah.
bid issues.
Bid
yeah.
issues.
Bid
I did.
issues, permits, there's just so many variables in any one of these.
Mhm.
That to expect that you're gonna get a project done in the same year. There are too, as I said, there's too many variables to have that be a reasonable expectation.
Well, I think we probably need to work on that for budgeting, but that's a question for another day.
Okay.
But those were my 2 questions, is how much of this can we reasonably get done this year?
Anybody else? Are there any members of the public who would like to weigh in on this item? Please raise your hand now. Seeing none, I will bring it back to the board. So unless there's any more questions, could I have a motion to accept the quarterly financial report?
So
So
moved.
Is there a second?
Second.
Okay, all in favor, say aye.
Aye.
Aye, any opposed? Motion carries.
Just for clarification, 2 of you said it at the same time, and I know that question will come up.
I'll give it, Barbara.
Give it to Barbara.
So Barbara, I made the motion.
Thank you.
Shows I'm paying attention.
Okay, item 4C, authorize the general manager to issue a purchase order for the install of effluent pumps in the amount of $368,500.
Yeah, so these are the effluent pumps. So we have 3 effluent pumps, and these pumps are required when we discharge effluent to the outfall when there are winter storm situations or when there are king tides. In the normal course, it flows by gravity from the effluent station to the outfall. So we have 3 pumps which are in good working condition, and these have been installed about 30 to 35 years. We have no issues with those. But then the lead time for these pumps are pretty large. It takes almost, I would say, 6 to 8 months for us to get pumps. So in the past, and we added these in our infrastructure projects, and we procured these pumps almost 2 years back, 2023. So we would like to get these pumps installed. We have 2 pumps lying, waiting for installation. So we sent out bids to the contractors. And as you see in the packet, we've had to, we reached out to almost 7 contractors and only 3 of them responded because most of them were busy and were not willing to respond. So of the 3 also, we had to, excuse me, we had to cut down some of the things which we said that it might be much cheaper to get it done in-house rather than getting it done through a contractor. Like painting, we can get done things outside. Procurement of valves, our staff can procure valves. So we went on reducing it. And finally, we said, okay, this is the construction which is required by the contractors. This is the installation which is required. Now, replacing these effluent pumps is also not just plug and play. These are not that simple. Because over a period of time, the design has changed and the civil codes, the building code, construction codes have all got changed. Therefore, the existing pump foundations are actually undersized for these new pumps. So a lot of civil work has to be done. The slab openings are undersized. So during the design stage, we had to actually hire a structural engineer to make sure that these are compliant, and he had to come up with certain designs, which were all included in the bid package when we sent it out to the contractors. So here we are, we've got 3 bids from 3 different contractors. We've got bids from 3 different contractors, and we have given the board 3 options. First of all, this construction will start only in the month of May. We don't intend starting during these seasons because obviously we don't want to have the pumps down, plus the wet well will be totally isolated. So we will not be able to cater to any winter storm or king tides. So we'd like to schedule it in the month of May or June, and that's already included in the bid package. So the contractors are aware of what. So that's why they have these prices also, which are held for quite some time. And second, they would like to order they'd like to get an award right now so that they can go ahead and procure the long lead items right now so that they can be prepared for May, rather than waiting until May or June to order. So the 3 options which we are giving to the board is, first option is authorize us to issue the purchase order right now. Although the work is expected to commence in May, the funding will be required only in June 2026. And we can always add it into the capital budget of next year, 26-27, in case we need funding. We can work around that point of time and see whether we need funding or whether there are any projects where we have project money, because these are all estimates, the budgets. That's number 1. Number 2 is for the board to cancel all the bids. And then we go out for bidding again in the month of June, July, or after July, once the budget gets approved. And then if we get contractors at that point of time, then we can go out for bidding. Number 3 is we don't take it up at all. We just store these pumps safely. And as and when the funding is available, we take it up for installation. Of course, staff recommendation is that we would like the board to award the contract right now to GSC Construction so that they can go ahead and procure the items, and we can start the process of installation. And staff is here to answer any questions.
Okay. We'll start with the board. Paul?
So, so option 1, you're recommending because that's a known cost. You know what that is. Option 2 is an unknown. Right? If we wait and go out for bids later, that's your concern. More we wait, we typically see the price goes up, never goes down.
Price will go up, as well as I don't know how many contractors will want to bid at that point of time.
Right. So that's why, I'm just, because I try to work backwards why we're doing it now. And then option 3, of course, and then just let them sit around till we need them, or
Yeah, if they don't want to, if the board doesn't want to take it up until we have, say, until we have a breakdown in one of the pumps, and then we plan on the other, because we have 3 pumps.
Right.
And there's a rare situation when we use all 3 pumps, but we have used that in one of the storm situation in the past, all 3 pumps.
In the recent past?
In the recent past, about 2022, 2023.
Right, so things,
yes.
We know that climate seems more intense recently, so I would want to prepare for the extreme, especially since we decided to buy the pump,
Correct.
right? That was a
right.
decision the board had made. So I would like to install them. I just wonder because we had to change the bid. I was trying to understand why we had to go back out a couple of different times.
Oh, that's because the scope of work was being changed.
Right, but
To the
just with
contract.
those three bidders, did we try to reach out to the other ones when we changed things or no?
No, we did not, because out of the 7, only 3 responded and others cited high workloads as the primary reason.
Okay.
So we didn't want to, it was not that they were high or
They just wouldn't.
they just didn't
submit
want it.
them?
They said they were
Okay.
busy in other projects and they were not interested in bidding for it.
And so then where would this money come from? Because we haven't budgeted for this. right?
We haven't budgeted for the installation right now. What we procured earlier was the equipment only.
Right, I mean, that was budgeted.
That was budgeted. Yes.
So where would we get the money for this?
This money would be coming from the general budget itself, because as you know, our general budget has got all these different environmental operations, infrastructure. We don't have an infrastructure budget. So we take it from the general budget itself. So in the month of May, if we need to incur any expense, we would not be incurring the same 365,000 immediately at that point of time. We'd probably gradually go on for about 2-3 months. Till the contractor finishes his work, we would not be paying him the complete amount. So the plan is to add this amount in the infrastructure budget, in the general budget for the next year, 26-27.
I
So,
understand, I know, it's hard, I try to wrap my head around
Right.
that, because I'm used to having an adopted budget with line items. It's a little different here, we've talked about this before, we even talked, maybe we would change some things in the future. You know, how things are presented or, you know, how we budget, so. And this works within our agreement, how the JPA is set up, right? How we talked about how the money
Correct.
comes from the operating, you're saying, or the.
Yeah, let me give you an example.
Yes.
In the last year's budget, the board approved purchase of a boiler. And we said we don't have money for the install, but we'll budget it in the next fiscal year. So we got that added in the capital budget of 25-26 for install. But we went ahead and procured the boiler because there were long lead items.
Mhm.
We did that last year.
Yeah.
So I'm recommending now that
Right.
we do have money for whatever takes place in the month of May or June, because that will be just submittals and other things, which, basic construction work, whatever he would be starting. But by that time, we would have hopefully got the budget approved starting July 1, and we will have funds.
But we are committing the money now, I mean, that we are saying spend it.
Yeah, we are
So we
saying,
approve it tonight.
Yeah.
So we have to have the money, at 360,000, not a large number to me, but still, I'm trying to understand that process, how we're.
yeah, but we don't need the money right now. We are not going to pay the contractor right now.
But we're
Committing to
authorized,
budget it for next year.
yeah,
Yeah.
yeah,
Correct.
okay.
But we're committing the contractor to a fixed price.
Yeah,
that
because
typically
you're gonna enter
signs.
you're gonna enter an agreement with the
Yes,
contractor.
so we are locking his price.
So we're fixing this price right.
Correct.
We have, and there's lead times on these too, right? Yes.
Director Dunn?
so this seems great. That's a logical thing to do. But we also have a need to do the Sam Force Made in Marterra and pay for the costs of that in the next fiscal year. So are we by agreeing to this, essentially saying we're going to add this to the budget allocation to complete the Montero Force Main next year? So we're deciding now on a total budget for next year. I mean, we all know that the Montero Force Main replacement is going to be expensive and we have to have money to do it. So I'm not saying I'm against this, but I think to say, oh, sure, $368,000, no big deal. But that's $368,000 on top of millions of dollars, I think, because we have a deadline to finish the Montero Force Main, right?
June 2027,
And it's got to start work next year, doesn't it?
provided the board accepts the guaranteed maximum price, which will be given in May 2026.
But if we don't, well, if either way, we are going to have to enter into some kind of contract to finish the Montero Force Main project, yes?
Yeah.
We were under a court order to finish it by a certain date, so
Yes, but
we have to spend that money.
Yeah, but we don't know the price right now.
But we know it has to be done by the end of 2027. Now you're talking the 26-27 budget, and I realize that's 6 months before the end of the fiscal year and the deadline, but I mean, I just think we need to be clear when we vote on this, that we are voting to put this on top of at least one and maybe several other significant expenditures in next year's infrastructure budget. We can't just say, sure, this sounds like a
Yes.
reasonable thing to do, and the price isn't too high. I mean, it seems logical to me to do it, because leaving those pumps sitting around doesn't make any sense. And we've got a good contract, but let's just be clear what we're agreeing to.
No, it's good you're highlighting it.
And we're agreeing that our ratepayers are gonna pay more than we had told them they were gonna pay, probably.
Well, we haven't told our ratepayers what they're gonna pay yet.
Well, we don't just arbitrarily,
We did a 5-year projection in our last 218, yeah.
yeah.
Director Marsh?
I agree that point, because what we have projected on the 5-year CIP for next year is 3.6 million for the Montero Force Main, could be more than that.
Could be more than that, yes.
And so it would make that 3.6 basically 4 is what we would be committing to. Although even the 3.6 we may need to ask to Jeremy for another extension just to push some of that funding into the next fiscal year, because we may have a bigger problem than we know right now, and we won't know until May 2026. My question is I'm trying to track which pumps these are. We have one project on the ongoing projects that's 21 TP08, which was replace effluent pumps 1 and 2. And then we have 22 TP01, which was replace effluent pumps 1, 2, 3.
Correct. So it's 21 TP08 was for one pump, and 22 TP01 was for the second pump.
Okay, it says 1 and 2 and 1, 2, 3, but
Sorry.
it's the 2 pumps, because the numbers added up to 314, which is what
Correct.
you said we spent. So it's those 2.
Yep.
I really, my only other, I agree that if we have them sitting there, and we've had them sitting there for 2 years, the cost of installing them is only going to keep going up. And
they depreciate, right?
and they depreciate, and we now know what it will take, and we have someone willing to do it. So
Yes.
I agree it is most practical to do it, but I think the heads up on what could be our capital budget for next year and potentially the year after at this point is unknown, and this just means it's going to be 400. It's unknown plus 400,000.
Correct. Unknown from the sewer force main and Montana point of view.
Yeah.
Correct.
And potentially
And-
other projects
And
that are.
potentially the old carryover
Yeah.
of existing projects.
True.
This
Well,
last,
I don't know
I'm
if
sorry.
the
I'm sorry.
other agencies have plenty of extra money, but.
Last
You
year,
know?
the reason I'm highlighting that is going over the budget for this current year. And why I asked about the ongoing projects is our budget for this year, named 3 projects, but it also had a list of these other projects are ongoing, and they didn't have numbers next to them. But we're spending money on them. And if what carries through for next year, we'll need to spend money on. I just think we need to be more clear and transparent on what money we expect to spend on those, so that we really budget it for the
No, wait.
carryover projects.
We are transparent. Please don't make a statement that we need to be more transparent.
I think we need to make it more clear, because we have a list of the ongoing projects, but there's not numbers next to them. It's actually, I can find them on here,
Yeah, I
but they're
understand
not in
that.
the budget.
But that's why we have the finance committee. If you think that we are not transparent, please indicate in the finance committee.
I will.
Because I don't like that statement which is being made right now by you as well as by your agency in a public meeting, saying that we need to be more transparent. I can't understand how much more transparency you need from us.
Well, today, in the month of November, how much money did we spend on projects that are from prior years that did not have specific numbers allocated to them in this year's budget? That's what I'd like to see. That would be more transparent, because in the budget for this year, we did not allocate specific numbers to those ongoing projects. And what we're spending on them is coming out of the 3.6 million that we think we allocated for the force main, the boiler.
Of course, we would definitely have that disparity because we do not have a separate infrastructure budget. It is all general budget as of now. Until we have a separate infrastructure budget, which we cannot have it right now because of obvious reasons, it's all coming from the general budget. The budget, once the general budget is given to the board, it's an estimate of how much a project is likely to cost. So it could be plus or it could be minus, but it only gives me allocation of so much money. And keep in mind that once the projects are included in the budget, it is not an authorization for SAM to move forward with those budgets, to move forward with those projects. SAM staff has to come back to the board to work on those projects. And that's when every project which is in the capital budget comes to the board for approval.
I don't want to get into the weeds because I will get into it in the
Okay.
finance committee. I don't agree with that we don't have an infrastructure budget. We have a section called infrastructure. We just don't.
Yeah, well, we
They
could
could have line
easily-
items.
A good move on transparency would be to amend the JPA to create a separate infrastructure budget, separate from operations and maintenance. That would make it very clear to the public and to us, you know, what's being spent on infrastructure.
Well, in the,
I'd like to
in
ask
the,
a clarifying question if I could.
wait, can I finish the other
Okay.
point? In the general budget, we have administration and it has a lot of lines under it.
Correct.
And we have treatment, it has lines under it. And we have infrastructure and it has no lines under it. All I'm saying is we could put lines under that number to see what we're allocating to each individual product. That's all. I don't think we need a separate infrastructure budget to do that.
You're talking about engineers'
Here's my
estimates
clarifying
and
question.
projections and revised projections.
Here's my clarifying question. When we looked at the active ongoing projects, you know, you were looking at it on paper, I was looking at it over here. If we had that same kind of information, and then maybe monthly, it's like, and last month we spent this much on these different projects, and here's you know, all the columns you had about how much do we think is remaining. Would that be in the direction that you're looking for?
Exactly.
Okay.
Because what we
So you've
don't see
already-
now
you've
is how
already got
much
a-
remaining.
Yeah, well,
A concrete thing here that we could build on.
yeah, but we've already agreed to that when we discussed Q1 to Director Marsh's requirements, saying that these whatever projects we spend monthly wise,
Mhm.
put it into the quarter and say these are the projects that we spent on infrastructure for the month of July, August, September. So
That's
we are-
all I meant by transparency. I guess it's more detail.
So we agreed
Maybe a
for that.
better word than
Yeah. So
transparent.
we agreed for that when we discussed Q1, the last item, so.
Okay.
there's no-
Transparency unfortunately has become to be used in a pejorative manner.
I meant detail, and so I'll correct my.
Thank you.
Yeah. Okay, so I look forward to that because I was looking at this thinking, oh, it'd be kind of fun to see it over time, right? To get a sense of, like, because a number of these things are waiting on something in progress, on hold.
Yeah.
And I trust that you have a kind of a good timeline projection that you're working with, and I'm curious about it, so.
Yeah, so what we can do is for Q2, we can say during the month of January, October, November, December, these are the projects. So much has been spent, 20,000 on 22 to EP01, 40,000 on 21, so and so, whatever. We give you a list.
Yeah, that would be
Give
helpful.
me a
That should be
key
cool.
with
But that
the
means-
number.
We're spending against the $3 million that we all agreed we were kind of allocating this year for the force main, which we just need to be clear about that.
I think we need to be careful about getting to. We need a budget for planning purpose. Absolutely. But I don't recall an action by the board for infrastructure budget of $2 million. I don't know.
That's that's what the budget says.
It's
That's
in the,
what the
it's in the
capital
budget
improvements
paper.
program is, and it's mainly one project.
Yeah.
I mean, terraforming.
Which is what
I
we
thought
told
it
our
was for
ratepayers
that
they were
one project,
supporting
not the
here.
entire, because this.
It is for the one project currently.
It's
And-
3.5 for Montera,
and we
100 for
have-
the boiler and 35 for a truck. There's three
Right.
things on.
And if we don't plan well, we're going to end up like we were with the Montera project and the other projects where we're not doing the good maintenance and repair, and we're running up huge replacement costs. And
If we don't what?
if we don't do maintenance and repair and plan for it.
But that's not infrastructure spending.
That's O&M.
It is O&M, but we have been,
Of course, we have to do that. I agree completely.
well, that's good because it has been years since we've been looking at some of these projects and the costs have gone up extraordinarily.
But we have.
So I'd
been-
like to make a motion that we vote for option 1.
I have questioned myself. So we have a capital budget that for the coming year, it's about what, 3.6 million? It's the Montero Force Man to cover it. But then we have carryovers on capital projects that's on top of that. So somehow we need to graphically or in a chart show what's a carryover, what's current budget, and how those two are relating. So it's not,
That's a good idea, because that
Yeah.
shows, I mean, when I think of the budget, we work with the best information we have about what we anticipate for the coming year, and we go, we need to gather that much money and put it in the bucket. And then as the year progresses, we spend generally largely in that direction, but with something, flood happens or something explodes. Priorities shift and we'd like, okay, we have money, and then hopefully we don't have to dip into the emergency reserve here, or worse, in the emergency reserves back at our agencies.
Yeah.
But we know that's all, we know we've done preparation for that.
Yeah.
I just hope it doesn't happen this year. But
Right.
I like the idea to show we've collected money for these purposes, and some still remains that we think is going to be spent on that, barring a change in priorities.
what's the
I like the
carryover?
idea of the carryover.
Yeah.
Yeah, that's why we brought it up to the finance committee last time, saying that, we haven't gone for a media budget adjustment since 2019. Okay, we've been managing all our funds,
Yeah.
even for the winter storm damage what took place. We did go for a media budget adjustment, but we returned back the money to the member agencies. So which means for the past 6 years, we haven't had a media budget adjustment. So we're taking it from all our general budget. Now, the present situation, whatever it is, because the sewer force main in Montero, construction is going to start only in June 2026. We have funds there, so we've been using it for other projects after board approval for those projects. It's not that we're using it for projects which are not approved by the board. Correction.
Right.
We're using it for projects which are approved by the board.
Right.
So we gave an option to the finance committee saying that if you don't want us to do that, you want us to save that money for the sewer force main in Montero, fine, we can do that. But then we'd like to go for a media budget adjustment so that we can replenish our reserves.
Right.
Because we are falling short on reserves. At that point of time, the finance committee decided that we'll probably take a decision later on in the year once the lawsuit gets settled down, and we don't want to go there.
Right.
Right.
As long as there are no cash flow issues, do it the same way.
So it's I'll use the word, a transparent option. We can take the money from here, which is, it's right at hand. As long as we track it and everybody knows what's happening, that's probably okay.
Correct.
Or we could be more formal and go back out to the agencies for the mid-year, which is no fun for anybody. I didn't
Exactly.
realize it had been that long for a mid-year.
Yeah.
That's great.
Yes,
I think it's just
Because we
the
didn't-
Princeton
No one liked the
punctuation
mid-years.
adjustment.
we haven't done a media budget adjustment since 2019. The last we did was when Beverly was here, and that was the time when we had some emergency
Yeah.
repair on the Granada Force Main, I think.
Remember that, yeah.
And that's when we did it, 20.
I do have one, I'm sorry, were you finished? Because I had one more.
Yes.
Okay. Now, we could be pulling some monies from the emergency fund, correct?
Correct.
And now, I mean, this wouldn't qualify as one of this, I don't think, but.
Yeah, but we still give our cash flow statement to the finance committee and every committee meeting. And we indicate what our reserves are, and we are well within the reserves, we are plus or minus, we indicate that.
Okay.
That's clear.
Yeah.
And if we pull from the reserves, we are pretty much obligated to replace them.
Replenish that,
immediately.
yes,
So
which
it's
is-
not, it's an emergency reserve, not a cash flow.
And yeah,
reserve.
there are only two conditions under which you're supposed to pull. from.
Correct, and policy says that within 90 days, we have to replenish back the
Which
emergency
would
reserves.
we'd be doing a mid-year and having to go through the whole formal process. So, okay, so it's,
So we didn't want to burden the member agencies
Yeah.
by going for a media budget adjustment always. Some of these projects come up requirement of the plant, some emergencies come up.
Yeah.
But we're able to manage it within our cash flow situation without reaching out to the member agencies.
Kishan, I think that
Yeah.
I think that has worked over the last 4 years because it's a lot of projects that are a lot of small projects. I think push comes to shove with one very big project like Montera Force Main that has a hard date. And that stresses that cash flow management system. And so I think when and so some of the things you and I had this discussion, when you do have to just do regular facilities maintenance and repair, the panel or the diffusers that can be capitalized, those are charged to the infrastructure budget because they're capitalized. But they aren't that sort of incidental repair and maintenance isn't actually budgeted on any specific line. And it can be, $400,000 or $500,000 of the year. And the other thing that we haven't budgeted, I don't think detailed, I'll use that word, in the budget, is the carryover cost for the carryover projects. And so they've been coming out of cash flow. And so what we said in my agency meeting is, what it looks like in the budget is there were only 3 things that we said we were going to spend the infrastructure money on, but we're spending it on those 3 things plus the carryover, plus the incidental. And just to make our what you're going to spend more clear, I think when we budget next year, we just need those 3 buckets, the new projects, the old projects, and the incidental repair and maintenance. Underneath, it can be underneath just sublines under the infrastructure section of the general budget.
Yeah, that we agreed upon in our past meetings. We said that the new budget for 26-27 will have an infrastructure item in, say, treatment.
Yeah.
Certain things which might come up, which get capitalized. Anything above 5,000 gets capitalized. So we'll be able to take it from that rather than from the main infrastructure budget.
We agreed that, but we didn't talk about the carryover projects.
Right.
But I think we.
So these would get
those
added
two.
also into the.
Yeah.
And I think we discussed it and thought it was a good idea. I don't know that we ever had a formal agreement. I'm looking forward to seeing,
Yeah.
a specific proposal.
No, we have that
Because
back
when
of.
you're on board with this, I'm not, I think there are some changes and we can work together to make them, but I think they're still in process,
Yeah.
figuring out what they should be.
No, we have that at the back of our mind to when we do the 26-27 budget.
I do want to make clear, everything that's being spent is legitimate spends on legitimate things that are improvements in the plant. So I wasn't meaning to suggest anything otherwise.
Thank you. Thanks for the clarification.
Of course.
Anybody else? Are there any members of the public who would like to address this item? Seeing no hands raised, I'll bring it back to the board.
Do we have
Looking for a motion to,
Didn't we have a motion?
there was a motion, but there was no second. I'll second the motion.
Can you restate your motion?
I move that we accept the recommendation made by staff of the first option.
Okay. And you second it? Yes. Roll call, please.
Director Negengast,
Yes.
Director Marsh,
Yes.
Director Boyd,
Yes.
Director Dye,
Yes.
Director Slater Carter,
Yes.
Chair Ruddock.
Yes.
Thank you.
Okay, moving on to the general manager's report, 5A monthly manager's report for October 2025.
Yeah, we have the complete detailed report of October 2025 in the packet, but staff is here to answer any questions. But beside that, I also wanted to give a quick update on 2 projects that we're working on. One is procurement of solar and storage battery. It was discussed in the finance committee meeting a couple of weeks back. We had a presentation made by one of the vendors. That point of time, finance committee advised us that we should go out for an RFP and get more bidders rather than going for a sole bid. So we prepared an RFP, sent it out, and we got about 9 potential bidders. We had a mandatory pre-bid meeting last Friday, and we got 9 bidders. The RFPs are due in the month of January 9th, on January 9th, and we wish to bring it to the board for approval in the second meeting in January. So we are hopeful of getting some good proposals. So.
And this is going to be an additional expense. This will be an additional expense that we will be approving these.
Actually, what we mentioned to the bidders is that SAM is not going to pay even a single dime on this. it's all going to be like a PPA or anything where
Right.
it is built into the savings and we
Just
don't
wanted to
have
clarify that.
Yeah. So I made it very clear to the bidders that Sam is not going to spend any money on this. And their proposal should make sure that it's paid over a period of 20 years from the savings or whatever.
Mhm.
So let's see what they come back with.
Yeah.
Okay.
I
Sorry.
think that the board needs to see the potential layouts of this and I think we need to make sure that this will fit under Half Moon Bay's environmental rules and all of those other permitting issues before we get too far into this.
Certainly a consultation seems warranted.
Yeah, yes. Yeah, like if we're gonna do it, we should line things up to success.
Absolutely.
There's areas without much good habitat.
Okay, and the second update I wanted to give was on the sewer force main in Montana. So right now they are working on the design. They've completed the 30% design. And then when they complete the 65% design, they would be bringing it to the board for the gross GMP, gross maximum price. At that point of time, that will be sometime in the month of April or May, when the board can decide whether we move forward with the same contractor or we go out for a bid. If we decide to go for a bid, then they are obliged to complete the rest of the design and give us a complete shovel-ready package, which we can go out for a bid. So that's the understanding. We've been having monthly meetings and there's good progress. We are supposed to get the environmental update. We're going to get the mitigated neck deck documents, which will probably be given to the board in the month of January. Then we go out for a hearing and all that in the month of March, April is what is being forecast right now.
And still it could be completed. I have no idea how long it takes to complete it once you start. Still, you think it could be completed by the end of June 2027?
Oh, yes, the contractors are confident about it.
Okay.
So that's
So
why,
the M&D could take a while.
come again?
The M&D.
I mean, it takes a while. Yeah, that's why they're giving us a draft document sometime this week. Then we review it. Then we bring it to the board for review. And then we actually go for a public hearing. Then we have to give those 45 days.
Yes,
or
we
whatever.
just went through it.
Yeah.
We know.
Yeah, we know all that. So,
Yeah, but it's worth doing.
so we're there. It's just progressing. So,
Yeah.
So you're pleased with the way it's going?
oh, yes.
Good.
Yeah, we're on schedule right now.
So the planning takes 2 years and the building takes a few months.
Oh, yeah.
Yeah, in their design work, do they have in that some
Measured
rough
time,
schedule for what they think it'll take to install, or is that another?
Yeah, they do have that. They have a complete schedule up to the end of construction.
Perfect. Great. Thank you.
Yep.
And what's the name of the firm that's?
It is McGuire and Hester. That's the contractor, and that design consultant is M&S Consultants. They're contracted with M&S. So these are the two updates which I wanted to give, and the third update is about the electrical building relocation. We've got the 65% design going on right now. The 30% design was brought to the board a couple of months back, and they'll be ready with the project sometime in March, April. And we are pursuing other agencies for grants. We've already sent it out to FEMA and they put us on wait list. They said no funds right now. But I'm also trying to see other sources with help coming from everybody else.
Can we get the deadline extended on the grant for the design? Considering that there's no FEMA funds available?
Grant for coming out.
Aren't we required to start work by next spring? Or pay back the 50% that we spent on the design?
No, we are required to complete the design. That's our first milestone by a certain date in May.
Okay.
So they have just given an indication as to when it should be completed. I think it's 27 or 28. But then they will decide in the month of May if we move forward with it. At that point of time, new dates can always be worked out. So.
Okay, if there's no more comments, let's move on to, actually, is there anybody in the public who would like to comment on the general manager's report? Please raise your hand now. Seeing none, I'll bring it back to the item 6, attorney's report.
Yes, thank you, Madam Chair. I've got 3 items to address. 2 of them are quick, and then I'll ask the board whether you want me to go over the SB 707 memo. I sent that to you before the board meeting. It's kind of long. Just kind of goes over all SB 707 did a lot of stuff, and so it kind of goes through the different things. But I don't need to go through it. If you all want to read it, and then if you have any questions, I can answer them later. So it's up to the board. But the first two items are there's an initiative with the State Water Board called the Wastewater Needs Assessment Effort, WWNA. Pretty early in the process, it's a 4-year effort to evaluate what it means to be a at-risk wastewater system. Now, there's been similar efforts on the water side as part of consolidation efforts on water, and now there's a somewhat similar effort, although I would say it's really in the early stages with wastewater. And CASA is pretty heavily engaged on this. But one of the recent things that's come out is they're developing, they meaning the State Water Board with assistance from a couple of universities, are seeking to develop criteria as to what makes a system at risk, what makes it an inadequate system. And some of the things that they're looking at are like the spill volume per population served and the spill count per system length, things of that nature. So that's something that CASA has started a working group on, and the attorneys committee has been involved in that. And so I just want to make you aware that's happening. It is something that in the future will, and what they're going to do with it remains to be seen. Are they going to try to use it to force consolidations? Are they going to use it for purposes of enhanced enforcement? We don't really know, but it's something that certainly CASA is paying attention to because it has the possibility of affecting a lot of different member agencies. So that's one issue. Another is I sent a recent Ninth Circuit Court of Appeals decision that came out on Monday. I take that back. It was last week. It was, I believe it was last Thursday. And it really is more of a water case, but it does have one significant issue for SAM, particularly as SAM seeks in the future to do infrastructure projects in areas that can have a lot of sensitive habitat that may contain endangered species. The main issue that came out of that case, I think is significant for SAM, is for the first time, you had a federal court or a federal appeals court recognize the importance of not just focusing only on one endangered species, but actually in fashioning relief to the extent that there is believed to be any kind of harm to a species of concern, that you can't just look at one. You have to look at all of the endangered species. And at least in the case, the San Luis Obispo case, where I sent you the brief in the Ninth Circuit opinion, there was a strong emphasis on the fish, the steelhead, which is a big issue in Southern California, but you have salmon and other fish that are also endangered in Northern California. So it's kind of a statewide issue of concern. And one of the things that happens is you can have a real focus on getting additional flows. And by doing that, you can actually cause harm to the habitat of terrestrial species, frogs, birds, salamanders, you name it, right? So for the first time you have the Ninth Circuit Court of Appeals say, you got to look at both. You can't just do a remedy that only addresses the harm to the fish. You have to look at what impact does it have for other kinds of species. And so that's something that we're going to have to look at and I don't know what endangered species we might encounter or what habitat we might have. I know the area for the Montara force main or the force main of Montara is already kind of disturbed, so it may be less of an issue than in some areas that are kind of undisturbed habitat. But it's a big case, and I just wanted to make you aware of it. So that's the two items, and then I guess does the board want me to quickly run through this memo and just kind of hit the highlights, or do you guys want to wrap it up and just read the memo at your leisure?
Read it. We'll read it and ask questions. How's that?
Yeah.
Offline.
Sounds perfect.
Okay.
Sounds good. I'm at your disposal. So
Okay.
with that, that's the end of my report.
Thank you so much. All right. Topics for future board consideration. Item 8.
I thought we were gonna take recycled water off, since it's not really in our purview, as it turns out.
I don't see it listed. I just see.
It's on the
Yeah,
last
you add
page.
it as a,
Yeah, it's fine. It's not a big deal.
we can remove it.
I would remove it.
Makes it sound like it's something we're actually not gonna be able to do something about.
Yeah, I'll probably
And I
remove this.
wish it was. I wish it were, but it is not.
Do we have anything to discuss in closed session?
No, nothing from my side.
I don't see a need for it.
Okay. Now. Keisha and I just discussed canceling the second meeting in December. PCTV can't be here to tape the meeting. So we might as well just see you in
Like
January.
December 22nd or something.
Yeah.
Sort of assume it's gonna be canceled.
Okay, we're canceled, next meeting canceled. And
Happy holidays.
Yes, happy.
happy holidays to one and all. Stay well and safe and have a good time. Right, hope there's no storms like we had New Year's Eve in
Yep.
2022.
They're saying
Small-
no rain
small
at all
storms
until
are
after Christmas at least.
Might have small ones. That's good.
Not good.
Good.
Okay, everybody, this meeting's adjourned.
Thank you.
Thank
Happy
you.
holidays, everyone.
Thank you.
Last meeting of 2025.
Well.
Bye now.
Well, we have finance.